Hello there. Welcome back to grade 11 accounting. In this video, we want to look at a question paper of April 2021, which is a common test. So this is the question paper that we want to look at. So we are going to look at question one. That's where we are going to start. If you see that our question one is got 21 marks, it requires you to spend on average 19 minutes. So our question reads, you see that our question is on bakery 2, Solomon Stores. You're given 1.1, whereby it is the owner, Solomon Shaban, ensure that all payments to creditors are made and discuss two advantages of EFT payments. So obviously, we need to come up with advantages that we have of EFTs. So basically, we see that the use of EFTs has gotten an advantage of quick payments. Remember, whenever we want to make a payment, it can be done instantly. So we are saying the method is quicker, and also we can also try to raise a point in the form of an advantage whereby we are saying it can be done at any time in terms of that it can be done out of normal business working hours. So it means there is an element of flexibility in terms of the application of EFT payment. So basically, those are the points that we are going to raise in our answer section. So one of our first points we are going to say electronic payments, which are EFTs, are quick, so it becomes an advantage. And also, we can see that another advantage that we can try to raise is that EFT payments are relatively safe. EFT payments are relatively safe. So basically, that's what we have in terms of advantages of using EFTs. So moving on to the second part of our question, you see that our second part reads account the cash payment journal. So our question is got 10 marks, and we are paying on the cash receipt journal, and the given information in total on 30 June 2020 before amount of 47,740,340. So we are given further information that we are given information in the form of an extract from the bank reconciliation statement on 31 May 2020, which is the bank reconciliation statement of the previous period. And then we go to information C, where we are given additional information relating to the bank reconciliation statement for May 2020. So further information is given that we are also going to use in answering the question. But at this point, since we are going to prepare the cash receipts journal, in the cash payment journal in terms of calculating their final balances, we are going to start with the balances that we are given on A, which are the cash journals, which we have the cash journals and the following totals on 30 June 2020 before the bank reconciliation was completed. So it means in the cash receipts journal, we are going to start with this figure, and then in the cash payments journal, we also start with this figure. So going to our answer section, you see that in our answer section, we've got 47,740, and then cash payment journal, we also have 41,340. So with that, we can proceed to the adjustment that we are given in the question. So we go to additional information C. Remember, we are going to start with adjusting in the cash receipts and the cash payment journal. So obviously, we are going to look at items that are appearing on the bank statement, but that are not appearing in the journals. Then we can update the journals from there. So this is exactly as we want to answer it. So if you refer back to the question, you would see that on 1.3 we are given prepare the bank reconciliation statement on 30 June 2020. So it means also you need to prepare the bank reconciliation statement. Remember, the errors that you are given there, they're going to affect the journals, and also they affect the bank reconciliation statement. So we can as well try to start by entering the opening balance that we have in the bank reconciliation statement. So if you go to our answer section, you'll see that we also have the space that we have for bank reconciliation statement on 30 June 2020. So we can as well try to enter the opening balance, so that as we enter all the errors that we are given, we can update the cash book. And if the error is affecting the bank reconciliation statement, you can immediately just adjust in the bank reconciliation statement. So if you refer back to the question, you'd see that the balance that we have for the bank reconciliation that we are supposed to start with, we can as well try to check according to the information that we are given. So you'd see that according to information given, we have the balance for bank statements being 24,940 as given here. Remember, this is the bank statement. This is the June bank statement. It is that amount in the cash journal. So it means this is our cash, our bank statement at 24,940. So this is the balance that we are going to start with. So we go to our bank reconciliation and start with that, and we are seeing that it's a credit balance. So we are going to say credit balance as per bank statement, and then obviously the figure that we have identified it as 24,940. So we are saying 24,940. So this is the figure that we have. Then from there, we can now be able to try to trace the errors that we are using. So we start with additional information relating to bank. That is the bank reconciliation statement for May 2020. So the first point is saying the outstanding deposit of 7,200 rands. So the outstanding deposit that we have is appearing on the same. It's now appearing in the recent bank statement. So it means this the outstanding was now updated in the recent bank statement. So we are not going to adjust anything. So we can just proceed to the next point, which is saying EFT number 415. Remember, this EFT was outstanding in the previous period, but it's not adjust anything. Remember, all the entries that we are having on this bank reconciliation statement of the previous period were there in the cash journals, but we are not on the bank statement thing. So EFT number 416 appeared on the June bank statement with the correct amount. So EFT number 416 is now there on the bank statement again, which means we are not going to adjust on the bank reconciliation statement. So, but in the journals was incorrect amount. So the incorrect amount is this one, 2,650. So it means we have to calculate the you see that it's 6,250 minus 2,000, 6,250 minus 2,650. We are going to get your answer. Yes, we can as well try to calculate that. I would see that the answer that we are going to get there is 3,600. 3,600. So it means remember it was in the cash payments journal. So in the cash payments journal, it appeared as a smaller figure. So you go to the correct amount, which is 6,250. So you go under cash payment journal. So we are saying go to where we have our cash payment journal. So we see that we've got our cash payment journal here. So we can as well try to enter it under as 3,600. So this is what we have, and then we go to we can as well try to proceed to the next point. Remember, this one was the last point that we on C. Then we go to D. So on D, it reads entries in the cash journals not shown on the June 2020 bank statement. So these ones are in the cash journals, but they are not on the bank statement. We are given EFT number 480 for 2,500. So obviously, this has to appear. They have to appear in the bank reconciliation because they are not there on the bank statement. Remember, items that are not appearing on the bank statement should be put in the bank reconciliation statement. So we have got this one EFT number 480 for 2,500 rands, and then we also have EFT number 481 for 1,800 rands for repairs to the vehicle. We have another one. So we've got outstanding EFT for cash deposit of the earnings of the week ended 2020 of 12,400. Remember, in our bank reconciliation statement, we are supposed to start 12,450 as outstanding deposit. So if you come here on our bank reconciliation, we are going to say outstanding deposit. So on outstanding deposit, we are saying we have got 12,450, which is the amount that we have here. Is 12,450. Then from there, 480. So you can say debit outstanding. Debit outstanding EFTs. Remember, outstanding EFTs were supposed to debit them. So the first outstanding EFT, remember we identified it as 480 of 2,500 rands. So here we're going to say number. Then we go to the debit side. Then we've got the other one that we have, which is EFT number 481 for 1,800 rands. So we put a number 481 of 1,800. This is what we have entered completed on what we are having on D. So we can try to proceed to the next adjustments that we have. So from there, we can now proceed to information E, whereby it reads entries on the June bank statement from A1 bank that are not in the cash journals. 18 June, we are given a debit order of Max Insurance. We have given a debit order, Max Insurance, same amount. So, but request like this, it means you have to check information beneath that. If they are saying anything about this double entry, maybe there is a mistake that is there. So if you go there, you'll see that they are saying on point 1, note that the stop order is this will be corrected in July 2020. So it means it's an error which needs to be corrected. So this is an error that is on the bank statement. So as we are posting now to the journals, we just post it as one entry. And remember, it's a negative, and we are seeing it as a negative. It means it has to go under cash payment journal. So 3,400 cash payment journal. To our answer section, go to the cash payment journal, and we are seeing we have got an amount of 3,400. Then we can proceed in terms of the next entry that we have. So we have got 22 June, where we are given Etequin municipality, which is EFT. We are given again a negative 5,200. So as we are seeing it as a negative, we know that it's going under cash payment journals. Come in and we put in our 5,200. So this is what we have. And then we go to the next one. That is a positive. So it is rents are received. So we are receiving. So it's supposed to go. So we got 2,800 under cash and journal. So we come here, we put our 2,800. Then go to the next part, whereby we have it's a positive. It means 75. We come here, we see 9,000. Whereby we have got service fees, that case payment journal. Come here, we say 175. 175. So I'll go to the next one. We are receiving interest. So it goes on the other cash receipts journal. We go back there again and put 40 under cash receipts. Again, second point, we are told that the deposit from deposit of 9,000 rands and the interest ends there on 35 that we have here. 9,000 was for the fixed deposit that had matured, and then the remainder becomes interest earned. We are going to get 675, which is going to be for interest. But adjacently, they are just so basically that's what we have. So from there, we cannot be able to find. We cannot be able to find the our final balances. But if you try to refer to what we are having here, remember we also have our bank reconciliation of this negative 3,400 that is appearing twice. It means this error was on the bank statement as reflected here. So it means we have to correct it in the bank reconciliation. So negative 3,400, meaning it was on the debit side, of the bank statement of the bank statement. So basically, what we are saying our bank statement has got also a debit and credit. So this is our bank statement with a debit side and a credit side. So what we are saying is the debit side represents a negative, the credit side represents a positive. So we are saying by removing 3,400, we should end up 3,400 on the credit, and then we remove one of them. So basically, in this case, by entering on the credit side, it's an addition. So on our bank reconciliation statements, we are going to enter it on the credit side. So we go to our bank reconciliation. So this is our bank reconciliation. So we are saying we are going to present it as a credit amount incorrectly debited. So remember it was incorrectly debited. So we're saying credit amount incorrectly. The amount that we have is 3,400. So we're saying 3,400. So from there, we cannot be able to balance. We can start with our journals. So we start with the cash receipts journal, whereby we are saying 47,740. I think that the answer that you're supposed to get is 60,000. Payment journal, you're going to say 41,300 plus 5,253, 53,725. So basically, that's what we have on the totals of journals. Then we go to our bank reconciliation. whereby obviously we are going to add the total for the debit and the total for the credit and convey. So we're going to see that if you add the total of the credit, you're going to get it as 40,000. 40,000 for the debit, you're going to get it as, let's try to add it and please see what you get there. 0. So this is the total that is going to come in between, and then you put it, was that total is the debit side, that's why we're going to 190 minus 4,300. And you see that the amount that you are supposed to get as the balancing figure is going to be 36,490. And you see that that's where we are in our CD, so it means our BD is on the credit side. And in the bank account, it means it will be on the opposite side. It won't be on the credit side, but it will be on the debit side. So that's what we have. That's what we have there. So having that, we are going to give a description of the balance that will be having in the bank account. So we can just try to understand it from this point. As we are saying, we are having our CD on our bank statement on the debit side. So it means the BD will be on the credit. So it means the balance is the opposite. As we look at it from the point of view of the bank account, it will be now a debit balance. So here we are going to say debit balance is the bank account. So let's take note that the description that we give here, we give it from the point of view of the bank account. So we have described it as a debit balance is the bank account. Since it's a credit in the bank statement, so only in the bank account, it will be the opposite to be a debit balance. So basically, that's what we have, guys, in terms of question 1. So obviously, we want to move on to the next question, which is going to be our question 2 on this question paper. So moving on to our question 2. Our question 2 has got 25 marks and requires you to spend on average 22 minutes. So it's on fixed or tangible assets. So you are provided with information for the financial year ended 30 June 2020. So on the required part 2.1, it reads complete the fixed asset register. So we see that we are going to complete that fixed asset register on the information that we are given here. We are given information and we are given different points that we are having there. So going to our answer section, we see that this is the fixed asset register that we have of a delivery vehicle ND 446198. So we are going to fill in starting from accumulated depreciation for as at 30 June 2019, and then we fill in again book value. The same applies to as at 31 March 2020. We fill in depreciation, accumulated depreciation, and then the book value. So we are going to start with the accumulated depreciation as at 30 June 2019, but we are seeing that we have our depreciation for the year is at 30 June 2019 is given. So it's going to be simple. We have this figure, and then we've got the previous month is the previous period is basically we are saying accumulated depreciation. It's equal to previous period accumulated depreciation, and then we add the current depreciation period accumulated depreciation is 1,375. So we're going to say 1,375 plus 24,225, and you see that the answer that you're going to get is 45,600. So basically that's what we have is in the form of our accumulated depreciation. So in that case now, okay, our book value, it becomes easier to find, as we are saying, to find our book value depreciation. Book value, our cost, we are given it here, is 142,000. We are seeing 142,500 minus 45,600. Then at the answer that we are going to get 96,900. So basically, that's what we have on that. Then finally, we have our depreciation is a 31 March 2020. Then we can try to our depreciation rate is 20%, and we are seeing that we are using diminishing balance method. So it becomes easier. So obviously we have these details by 1 March 2020, so we can be able to calculate the depreciation for the vehicle ND 446198 for the period. So we go back to see that on the first point is saying on 1 July 2019, the beginning of the financial year, Cooper traded 2 identical delivery vehicles ND 446198 and ND on 1 October 2017 at 142,500 rands each. That is the first additional information that we have. Then second, say one of the vehicles ND 446120, which is the last period. Then the insurance company agreed to pay out our question mark. They were given the amount on 31 July this transaction. So this is the next option that we're given. The next point is saying depreciation on vehicle is calculated 10% per annum on the diminishing balance method. This information is on the register. Then with a new vehicle NT 9962220 purchased on 1 June 2020 for 180,000 rand. This was incorrectly recorded. So this was correctly recorded. So this is what we have. Then now remember what we want to calculate is a depreciation for vehicle NT 446198. So if you refer to the information that we have, you see that this is the vehicle that we accident that occurred on 31 March 2020. So it means in the last period, it ended existing in the business on 31 March 2020. And we try to see where our year is ending. Remember, our year is starting 1 July 2019, which is the beginning of the financial year. Financial year from 1 July 2019, 1 July 2019 to 31 March 2020. So we need to count the number of months that we had this vehicle, the whole of July, August, September, October, November, December, January, February, March. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So it was there for 9 months in that period. So to calculate depreciation, remember on the calculation of depreciation, we are going to use the formula percentage times book value. Where book value, obviously, we calculate it by saying costs minus accumulated depreciation. So obviously, we have to calculate our book value first. So we know that our cost is 142,500. And then if you check in terms of accumulated depreciation, it's 45,600 in the previous period. And then we subtract that, 45,600, and we got 96,900. So obviously, we're going to say minus 45,600. And the answer that we got there was 96,900. 96,900. Then from there, we can now be able to calculate depreciation for that. Remember, it's 20%. So we are saying 20%, which is 0.2 as a decimal, and then you multiply by 96,900 is the book value, as we are now using this part times 96,900. And then the number of months that we had that vehicle is 9 months. So we multiply by 9 over 12. So we do calculate it like that. We see that now the answer that we're going to get is 14,535. So this is going to be the depreciation for the period for that vehicle. So here we say here we have got 14,535. Then accumulated depreciation. Now we are saying previous period's accumulated depreciation, which is 45,600 plus 40,535, which is the recent accumulated depreciation. Then the same depreciation, sorry, and then the total is going to be 60. The total is going to be 60,135. Then the book value, obviously, again, we are now going to say the cost minus accumulated depreciation. What we're saying, 142,500 minus 60,135. And then the answer that we are supposed to get there, it's 82,365. So basically, that's what we have there. Then on the next part of our question, we refer back to our question. I will see that our next question is saying the asset disposal account in the general ledger for the sale of the vehicle on 31 March 2020. Asset disposal. So remember to present our asset disposal. We can just maybe try to give a highlight in terms of how we come up with our asset disposal. So this is asset disposal account. Remember that the cost of that asset should be on the debit side, and then the proceeds should be on the credit side. Proceeds we meaning the amount that was used to dispose that asset or to sell that asset. So should be on the credit side. It can be in the form of our pay cash, depending on the form of I'll be able to compare the debit and the credit to see which side is greater. So we're going to see that if our credit side is greater, it means obviously the balancing figure comes on the debit side and it's supposed to go to the profit and loss account, and it will be a profit. When it comes on the debit, it's a profit on disposal. But if you compare, we see that it will be a loss on disposal. So this is exactly as we are going to present it in our answer section. We've got our asset disposal. So the cost of the asset, remember, is 142,500, should be on the debit, as we have presented here, cost on the debit. So we are saying we come here, we are seeing that the debt, obviously here, we are going to put our debt whereby we are saying it's transpired on, we can come here, it's on 31 March 2020 here. So that's how we are going to present it here, whereby we are going to say 2020, 2020, 2020, and it was March 31. So I guess your March 31, depending on the space that we have, so we can maybe try to zoom out. And then the amount that we have is 142,500. And here we're supposed to write vehicle. Remember, this amount is coming from the vehicles. Double entry is that we debit asset is vehicle. So we're supposed to credit vehicle and debit asset disposal. So the amount is 142,500. So this is what we have on that one. Then accumulated depreciation, remember, we said it should be on the accumulated depreciation should be on the credit side. And remember, according to our asset register, accumulated depreciation is 60,135 here. So it's supposed to become on credit side. So go to the credit side and we're going to say same date we have got 2020. 2020, and we're saying March. Due to space, maybe we can just try to fit that it fits in the first row. So we're saying 2020, March 31, in full, accumulated depreciation. And then the amount that we have is 60,135 here. So that's what we have. Then on the credit side again, we are supposed to put the proceeds of what was supposed to be received on that asset that was disposed. But obviously we go to the information that we have there and try to see in terms of that amount. We can actually maybe try to refer back to our so if you go back to the question, you would see that in the question you are already given the loss. So remember, the loss will be the balancing figure. So as you are given the loss, it means the amount that was supposed to be received on the on disposal is going we are going to get it as a balancing figure. So we come here on our answer section, and then we are going to say on the credit side, that's where we're going to have our amount accrued income representing the proceeds, the amount that was supposed to be received, and then we leave it blank since we are not given any question, and we get it as a balancing figure. It's a loss. If it's a loss on disposal, it should be on the credit side, and we are given it as 12,300. So if you come here, and we're going to say a loss on sale of assets, loss on sale of assets, and we're given it as 12,300. So we can say 12,300. Then from there we can find this figure as a balancing figure, whereby we're going to say it's going to be the greater total, which is going to come here, and it would also come on the credit side. So to get the balancing figure, you can say 60,135, and then you get your balancing figure is 70,000 and 65. So here we say 70,065 is our accrued income. So basically that's what and also we have to take note that in the asset disposal account, we are not supposed to have a balance CD. The balancing figure that we have in the asset disposal account is transferred to the profit and loss as loss on sale of asset or profit on sale of asset, depending on the side that we are having the balancing figure. So this is what we have on this part, and then we try to see according to our question what else do we have. We go to 2.3 saying calculate the depreciation on the following vehicles on 30 June 2020. Show calculation so that part marks can be awarded 30 June 2020, which means on the last period. The new vehicle NT96220 purchased on 1 June 2020. It was purchased on 1 June 2020, and the period is ending on 30 June 2020. So what does it mean? It means it's only stayed June, so only stayed 1 month, and then we calculate by we make a proportion of 1/12 because it stayed only 1 month, and we are going to see that we are going to use the same rate, and we see that the amount of that ND 996220, we can try to look at in the additional information. ND 996220 is here. It was purchased on 1/2/2020 for 180,000. So we are going to say the rate that we have is 20% times 180,000, then multiply by 1/12. So we come here, we make that calculation here, whereby we are saying 0.2, which is our rate, and then we multiply by 180,000. Then we multiply by that you are supposed to get is 3,000. So this is our final answer. Then we go to the next one is saying the remaining vehicle NT223 purchased on 1 October 2017. So remember, if we go to the information given, I would see that the vehicle that is being referred to right, you see the first point is saying 1 July 2019, the beginning of the financial year, Cooper Limited had two identical vehicles, where we are of which 446,198 is the one that was written off. So it means what remained was 198,223. But they are having the same cost, which is 142,500. Very important. Take note. Meaning the calculations of depreciation are going to be the same up to the year that was the other one was disposed. So if you go to our register, you would see that the depreciation that we had on the year ending 30 June 2018 is going to apply again to the second vehicle, and then again at 30 June 2019 is going to apply to the same vehicle, to the other vehicle again. But on 31 March 2020, that's where it's going to differ, because in this year, that's when this vehicle was written off. So it only stayed 9 months. But for this one, it was there for 12 months. So we are going to take the book value, 96,900. And then we multiply by 0.2. Then we get the depreciation for the year. So basically, we come here. We're going to say 0.2 is the rate times our book value, which is 96,900. So when we calculate it like that, see that the answer that we're supposed to get is 19,380. So basically that's what we have. Then on the last part of question 2, it reads, discuss 2 measures that can be implemented to avoid a loss similar to this in the future. So remember, if you refer back to try to identify the kind of loss that we have, saying one of the vehicles, MD446198, was written off in an accident that occurred. So it is an accident. So our question is saying 2 measures that can be implemented to avoid a loss similar to this. So to avoid a loss of an accident. So obviously, the issue of servicing vehicles is very important, so that they don't encounter issues of accidents. So we are saying send vehicles for regular services. That's the first one. Send vehicles. Send vehicles for regular services. For regular services. Then the other one, remember the question needs 2. We also look for another one whereby we are saying ensure that the driver checks the vehicle regularly. So the vehicle has to be checked regularly to see if there are any problems with the vehicle. So you're saying ensure that the driver checks the vehicle regularly for any problems. So this is exactly what we have on this part. So this becomes the last question that we have on question 2. So obviously we need to move on to the next question, which is going to be our question 3 on this question paper. Hello? So moving on to our question 3, it says refer to information B Then it reads complete the missing details. That is, amounts are labeled A to F are in the appropriation account of DD traders for the year ended 28 February 2021. So calculations were necessary to part marks. So part marks can be awarded. So going to our information that we are given, we are given information A, and then we are given information B. Then beneath that, we also have additional information as per the partnership agreement that we are going to use to identify our A up to our F. So this is what we have. So remember, it's saying complete the missing details, amounts that labeled A to F. So we are going to start with our A, whereby this is an appropriation account, and our A obviously is on the credit side and represents the amount that was transferred from the profit and loss account. Remember, when it comes on the credit side, it means it was a profit that is coming, a net profit that is coming from the profit and loss account. So obviously, A is profit and loss. So go to our answer section. We are saying A is profit. To B, you'll see that B is interest on capital. So if you go to additional information, we are told that interest on capital is at 10% per annum. And then note that Adobe had increased the capital by 200,000 on 1 September 2020. The increase has been recorded. So what does it mean? If they are saying the increase has been recorded, it means the figure that you are given there, the figure that you are given for capital for Adobe, this one, 600,000. Inside the 600,000, there is 200,000 that was introduced on 1 September 2020. So we need to know where the year is ending. So we see that our year is ending on 28 February 2021. So we can just try to put it down, 28 February 2021. And we see that the capital was introduced on 1 September 2020. 1 September 2020 to 28 February 2021. That's a capital of 200,000. So the capital that was there for the whole year for 12 months is 600,000 minus the one that was introduced of 200,000. So basically, if we make that calculation, you are going to see that you are going to get it as 400,000. So basically, we are saying if you say 600,000, the amount of capital at the end of the year minus the one that was introduced of 200,000, you are going to get it as representing capital that was there for Dube for the whole year. So for that one, since we are saying 10%, we are going to say 10%, 10 over 100, then maybe get our 40,000. So this one is for the capital that was there for the whole year. Then for 200,000 now, we are saying 10 over 100 times 200,000. If you count the number of months that we have that 200,000, it's from 1 September 2020 to 20 February, October, November, December, January, February. We're going to multiply by 6 over 12. So here we are going to say times 6 over 12. So we multiply there. I'll try to see what we get there. We're going to get it as 10,000. 10,000. So basically that's what we have. So if you add now 40 plus 10,000, 40,000 plus 10,000 total, the total now becomes 40,000 plus 10,000, and you're going to get it as 50,000. So 50,000 is for interest on capital for Dube. So in the answer section, we are saying we have got 50,000, and then we add the other part of our interest on capital. We also have another partner, which is money is 600,000 again. So basically, this one is not going to be simple for us because there was no additional capital that was introduced for the money. So we're just going to say 10%, 10 over 100 times our 600,000, and then we're going to get your 60,000. So obviously, we've got 60,000. So we can just refer there as our 60. So every two, we're going to get 110,000. Go to our C, which is going to be salary for Dube. So salary for Dube, we'll get it. It's information we're given that Dube earns a salary of 15,000 rands per month. So to get the salary for the whole year, we're going to say 15,000 times 12. So here we come here, we say 15,000 times COP. Then if you multiply the two and you get it as 180,000. Then go to the next one is going to be our D. And if you check there, our D is salary for Tugwani. We go to there to see what are they saying. Tugwani in the salary that is 25% more than that earned by Dube. Okay, Dube is earning, according to our calculations, is earning 180,000. So then this one is being said is earning 25% more. So we are saying 180,000 is 100%. Then from that 100%, we add 25%. That is so the 125%. We can simply make it a factor by saying 125 divided by 100, and then you're going to get it as 1.25. Then you're going to multiply 1.25 times 180,000. So as simple as that, we go there. 80,000. You see that the answer go to our E. So our E is saying bonus for Dube. It is saying Dube receives a bonus equivalent to 60% of his annual salary. 60% of his annual salary, and his annual salary is his annual salary is 180,000, and we are going to say 60% of 180,000. So we say 60% is a decimal, is 0.6 times 180,000. We are going to get it as 108,000. And we go to our F. Our F is current account for Dube. So this is going to be our share of profit, obviously. It's going to be our share of profit. So we can just try to see in terms of the profit sharing ratio. Very simple. We are going to say, we are told that on the last point, the remaining profits and losses are shared between Dube and Kumbane in the ratio 2:1. 2:1, whereby we are saying it's Dube and Kumbane. So the first one is Dube, and this one is Kumbane. It's Kumbane. So from there, we can now be able to say the one that we are given is 35,000 for Tubani. So we are saying Tubani is 1. So 1 is equals to 35,000. Equals to 35,000. 1 is equals to 35,000. So 2 is the question mark. So it's the one that we want to look for. So basically, we're saying this is the question mark. So obviously, simple proportion, where we're saying what we don't have is 2. So it becomes the denominator, then you multiply by 35,000, 70,000. So it means our F is 70,000, whereby you're going to say 35,000 times 2. So come here, equals to, which is going to give us 70,000. So this is what we have on our question 3. And we also want to look at the last question that we have on this question paper, which is going to be. So moving on to our question 4. Question 4 is going to have 24 marks and requires you to spend 22 minutes on average. So it's on creditors reconciliation. So remember, on the creditors reconciliation, it's a comparison that is there between the creditors ledger and the statement of account that will be coming from the supplier or the creditor. So basically, we are saying what should appear in the ledger, in the creditors ledger, should be the same as what should be the appearing on the statement of account that will be coming from the supplier. So if there's any variance in terms of those two balances, there is no need for us to prepare the creditors reconciliation, whereby we are trying to correct the errors that took place during the period between entries that are there in the ledger and those that are there in the statement of account. So basically, that's what we also have to take note that what will be appearing on the debit side in the ledger, in the creditors ledger, should be appearing on the credit side. It should be on the opposite side, credit side in the statement of account. And the opposite is true, whereby we are saying what is on the credit side of the creditors ledger should be on the debit side of the statement of account from the supplier. So this is the comparison that will be there, that will be taking place. So our question reads, ABC traders buy static stock on credit from XYZ suppliers The information provided below is for March 2021. So on the required part, a monthly creditors reconciliation statement is XYZ suppliers sent monthly statements to the business. What would you say to the owner? State 2 points. So obviously, the question is asking us the importance for preparing the creditors reconciliation statement. So we are saying by preparing the creditors reconciliation statement, we will be able to detect errors that transpire during the period. So that becomes one of the main importances of us preparing the creditors reconciliation statement. So also it acts as a internal control measure. By saying internal control measure, we are saying it also detects other instances which are not detection of errors, but also detection of any fraud that might be taking place. So it can act as a check on other workers that are there in the business on how they are handling their work. So it can work as an identification of fraud in a way. So basically, that's the explanation that we have. So those are the points that we are supposed to raise in our answer section. So going to our answer section, we also want to try to highlight those points. So in our response, we are saying, although they are sending monthly statements, but those statements might have some errors. So the reconciliation will help us to identify those errors. So we are saying the statement could contain errors. And then we try to look for another point that we can also include. So you'd see that it's an internal control measure. It acts as an internal control measure. So this can be also another point that we can raise. Then second part of our question, we go to our question and try to see 4.2 saying reconcile the creditors ledger account of ABC traders and statements received from XYZ suppliers. So in our answer section, we are given the space for the creditors ledger and statement from XYZ suppliers. So obviously, we are just going to enter in the appropriate columns according to the errors that are presented. Then the information that we're given that balance due to XYZ suppliers on 31 March 2021 as per the creditors ledger account in the books of ABC traders, we're given it as 8,150 rands. Then the balance due by ABC traders on 31 March 2021 as per statement of account received from XYZ suppliers, we're given it as 16,535 rands. So those are the balances that we are going to start with here, whereby we are saying the one for the ledger is this one. For the ledger, we're given it here is 8,150. So here we are saying ledger. Then for the statement, it's here 16,535. So here we're saying. Then from there, we can now be able to go to the errors. B saying the following errors and omissions were not when comparing the creditors ledger with the statement received from XYZ suppliers. So these are the errors that we have. We'll start with the first point, saying ABC traders entered the debit note 31 for 500 in the credit column in the creditors ledger. Remember, the debit note was supposed to be on the debit side of the credit column. Was supposed to be on the debit side of the ledger, basically. So, but it's appearing on the credit column. So basically, we are seeing that is an error. So by correcting that error, we are supposed to enter it twice on the debit side, whereby we are going to start by removing the 500 on the debit side, and then we enter the correct amount. So basically, what we are saying is in the creditors ledger, we are using that 500 appearing on the credit side like this, but it's not supposed to be on the credit side. It's supposed to be on the debit side. So on correcting the one that is on the credit, and then we put the correct amount on the debit side. So basically, this is the correction procedure that we have. So we also have to take note that as we are in the ledger, this is our creditors ledger. If we enter on the credit, it's a plus. If we enter on the debit, it's a minus. So here we're entering 500 twice on the debit side. So we are going to have a minus and a minus when we are now correcting other section. So if you come here, we are seeing that we're going to say minus 500 twice, minus 500, and then we say again minus 500. So ABC traders forgot to deduct the trade discount of 250 they were given on the invoice. So ABC traders, ABC traders is representing the creditors ledger, and then XYZ suppliers is representing the statement. So take note of that. So ABC traders should show a negative 250 by deducting 250. So we should go to the column for the creditors ledger, and we indicate a minus 250. So we come here, and then we are saying minus 250. Then we go to the next part, whereby we are saying invoice 795 for 2,300 was for goods that XYZ sub. We have got an invoice that is appearing on the supply on the statement for BCD traders, and this statement is for ABC traders. So we see now the difference. So so what we are saying is in the statement, let's say this is our statement. This is our statement. So we are saying this amount of is 2,300. 2,300 according to information given is 2,300. It's appearing on the debit side of the statement. Remember, if it's an invoice, it should appear on the debit side. And it's not supposed to be there because it's not for ABC data. So it's supposed to be removed on the statement. By removing on the statement, it's supposed to come on the credit side to remove it. And we also have to take note that on the statement, a debit shows a plus. It comes will represent a minus if it's presented in the form of one column is answer section. So our 2,300 that we are correcting is coming. Our 2,300 that is coming on the credit side. This is a correction entry that we have. That is 2,300. So we come in. We say minus 2,300. So basically that's what we have. Then we can as well try to move on to the next part, whereby we are saying in terms of the contract XYZ suppliers charge all their debtors a delivery fee of 500 rands per delivery made during the month. 4 separate deliveries were made to ABC traders in the last month. 4 separate deliveries were made in the last month. So obviously, we need to see if this error is affecting one of our creditors ledger or our statement of account. So this is the first procedure that you have to try to identify. So according to how it is presented, it shows that it's already appearing on the statement coming from XYZ suppliers. But obviously, it's not yet recorded in the ledger. That's not the case. But we are seeing that there are four separate deliveries, each with what 500, each costing 500 rands. So 4 separate deliveries. So I'm going to say 500 and multiply by 4, and obviously you're going to get it as 2,000. So this 2,000 is not appearing in the ledger, but we see that it's a delivery cost, so it's going to increase the amount that ABC traders is owing to XYZ supplier. So by increasing the amount, it should be on the credit side of the creditors ledger. In the creditors side, represent a plus. So it's going to be a plus 2,000 under the creditors ledger. So we come here, we indicate it as a plus 2,000. Then we go there, we try to go to the next one. You're saying invoice number 98898 for 6,500 rands was correct according to the statement received from XYZ suppliers. ABC traders is recorded this incorrectly as 5,600. So let's try to see. So we are seeing that ABC traders is the one that recorded it incorrectly is correct. So the amount that was entered is 5,600 instead of 6,500, which is a small amount. So and it was an amount for invoice, so it was going to be a positive. It was going to increase the balance that is owing. So we entered a small amount. So it means we are going to enter the difference so that it goes to 6,500. So we're going to say 6,500 minus 5,600. And we see that the answer that we are going to get is obviously, let's try to calculate that one. So I will see that the answer that we're going to get is 900. So we're saying we have got 900. So we are going to show a plus 900 under the creditors ledger. So we come here, we say plus 900. We'll move on to the next part whereby you say ABC traders on 24 March 2021. XYZ suppliers only granted 300 as discount. They promised to correct this only on their statement. So we are seeing that this is an error that is transpired on the statement, and they entered a small amount instead of 800. They entered 300, and this is a discount, so it's going to reduce the amount that ABC traders is owing XYZ suppliers. So it is smaller by 500. So difference is also supposed to be subtracted on the statement. So we come here, we saw it as a negative 500. So this is what we have, and then obviously we need to move on to the next that we have. So moving on to the next error that we have it here saying invoice number 972 for 3,400 rands did not appear on the statement received from XYZ traders, as this transaction took place after their statement was prepared. So this invoice is not there on the statement 3,400. So it means we have to show it, and if it's an invoice, it's going to be a plus on the statement. So it's going to be a plus 3,400 under the statement. Plus 3,400. And then we move on to the next one, which is going to be it was incorrectly picked. So if it's a payment, it's going to be a minus. So it's an error on the statement. So we want to see we only subtracted a smaller figure, 450 instead of 4,500. So we're going to say 4,500 minus 450, and we calculate to see what we get by saying 4,500, and then we subtract your 450. You see that the answer that you're going to get is 4,050. 4,050. So this 4,050 is the one that we are going to make a further subtraction under the statement. So we come here, we say negative 4,050. Then we try to go to the next one. The statement reflects interest of 785 rands charged for an overdue agreement and points to reverse the entry on the April 2021 statement. The statement reflects interest of 785 rands charged for an overdue account. So it means 785 is reflecting on the statement as an interest on overdue account. So obviously, if it's an interest on overdue account, it increases the value that ABC traders is owing XYZ supplier. So it's appearing on the debit side, where we are saying it's a plus. So, but as we are saying, it's not supposed to be there, as they are saying they're going to correct it. So you have to remove the 785 that is on the debit side of the statement by entering it on the credit side, 785, and by entering on the credit side, it will be a subtraction. It's a minus. So we are going to say minus 785 under the statement. So minus 785. Going to be the last one. An invoice for 1,250 received from XYZ suppliers for goods purchased was incorrectly recorded as a return by is made by ABC traders, and it will be it was an invoice, but it was recorded debit note. It's on the debit side. So we are supposed to first of all, we are saying the scenario that we have on the ledger on the debit, which is supposed to be on the credit. So by correcting, we are saying, and then we put now the correct amount. As we put the first one, it goes back to 0, because you're going to say 1,250 minus 1,250 becomes 0. Then we enter the correct amount, 1,250 on twice on the credit. By entering twice on the credit of the ledger, it's a plus. So it's 1,250, and then we say again plus 1,250. So basically that's what we have. Then after that, now we see that we've exhausted the errors. This one was the last error that we then we now make our calculation minus 500, 900 plus 1,250 plus 1,250. Then on the statement we are saying 3,005, and then the answer that we are supposed to get again is 4,300. So by reconciling, we are saying the final balance that we are supposed to get under the creditors ledger should be the same with the final balance that we are supposed to get under the statement. So this is an indication that we have reconciled the two balances correctly. So we have seen the significance of preparing the creditors reconciliation, whereby we are correcting errors between two documents, that is the creditors ledger and the statement of account from the supplier. So this is what we've then we go to 4.3, which is saying refer to the delivery fees paid by ABC suppliers to XYZ to XYZ traders. Identify two ways of decreasing this delivery fee paid. Uh, how can we reduce delivery fees? Obviously, we can reduce them by ordering larger quantities less often. Remember, when we order less often but larger quantities, we are saying we are going to reduce the number of trips. So when we reduce the number of trips, obviously, the cost is going to go down. So that's the first solution that can be there. We are saying order large quantities. Two. So obviously, you need to come up with another one. Another solution we can maybe opt for collecting ourselves as a business rather than them being delivered by the supplier. So that can be also a solution. So by reduce the cost. So collect the orders instead of having them delivered. Instead of having them. Obviously, in the exam, it's supposed to fit inside the space that you are given there to input your answer. So this is what we've guys according to this question paper of March common tests. Hopefully, the video was helpful, and thank you for listening. And let's not forget to subscribe and share to our channel. Let's not forget to share the link to our colleagues who are doing grade 11 accounting. And let's take note, more typical examination questions are going to be uploaded on this channel. So let's stay tuned. Staying tuned is subscribing and turning on the notification button so that you get notified of new videos that are going to be uploaded. As for this video, I'm signing out. Let's meet again in the next video.